Here's 14 brutal property investing lessons I wish I knew earlier. So my name's Dwayne Squires and I've been investing in property since my last year at university. I've helped hundreds of clients build their property portfolios, bought and sold an agency for multiple six figures, and sold more than £30 million worth of property. But I've made some terrible mistakes along the way and learned some key property investing lessons that if I could, I'd pass on to my younger self. So given the fact that I can't go back in time, I'm gonna reveal all those lessons so that you can learn from my personal experience and save yourself loads of time and money along the way. Hopefully you find value. Let's get into it. So within the first few years of my investing career, I was actually helping one client who was a large property buyer, and they were looking to buy blocks of apartments. And in this particular example, it was a block in Manchester of just more than 30 units. This investor was gonna buy them, do a bit of work with them, and then rent them out. Once they bought it, the property or the block actually had quite a few issues with it. Over a 6 to 12 month period, that investor actually had costs running up, and I think it was just outside of the Manchester block that they ultimately led to them liquidating. They actually went into liquidation. We lost £50,000 worth of fees and investment. So the lesson learned from that is don't minimize it, don't shortcut it, get the paperwork right. So lesson 2, going back just a few years to COVID, during that period it was really tumultuous, as you can imagine. We had a number of HMO properties where students and tenants just upped and left because we had a number of international students and they just left unannounced without paying the rent. And at the same time, we were undertaking quite a few refurbishments on properties. Because it was lockdown, movement was very limited. So actually getting tenants to actually fill those refurbished properties was challenging. Now, in one particular example, because there was a shortage of demand at the time, we actually had a property that was refurbished, ready to go, and we had a tenant come in. We hadn't done our proper checks. They hadn't paid a deposit, and within 6 weeks, they just sent a message saying, I'm gone, I'm leaving. And they had actually signed a 6-month contract. That caused even more frustration at that time. So the lesson from that is make sure you get a deposit, no matter the economy or the reason. If worst case, make sure you get a insurance in place so that if a tenant ups and leaves, you've got some kind of coverage to protect you. Let's go into lesson 3. Similarly, we had a property where we were about to kick off the refinance process. We'd bought it, we'd redone it up and added value to it, and then we were just about to look to refinance. Right in the middle of that whole process, the tenant actually moved out a number of months before the contract was due. Only a few weeks before the value was about to come in, they'd left. So in our haste, because we knew the value was coming out, we actually marketed it, got new tenants who said they were desperate to move in, and within a few days, perfect, tick in the box, new tenant, just in time before the valuation. And positive, the valuation went through at the value we needed. However, we took them on, they paid well, but left the property in an absolute tip, costing thousands of pounds in repair. So the lesson there is don't rush the tenant onboarding process. Do thorough background checks, including where the tenant moved from, so you can understand what type of tenant they are and whether they're gonna look after your property as you expect. So lesson 4 is, we bought a house with a tenant in place, and I love those type of investments because they're low risk. But in this particular example, we bought it for 82,000 and we factored in the refurbishment of 15 to 20,000. And it was due to be worth around 120 to 130,000. We knew there was a challenging tenant because the last owner had informed us, but we were prepared for that because we thought it was a good investment and we would actually do it again. Now, the real issue is that the tenant eviction took far longer than we expected. It took 8 months to move that tenant on. And when we factor in solicitor fees, court orders, and the tenant, whilst they were paying on time, they were paying far below the market rent. We lost out on the extra rent. So it cost us around £3,000 to £4,000. So a lesson there is I would absolutely do the same type of investment again because it was a great area and the numbers worked, but factor in the additional cost if you plan to move a tenant on. Lesson 5, when we buy a property, sometimes we can treat it like our own home. We invest in the property, refurbished to an astronomically really high standard, only to experience it being devalued later on or not meeting the rent that we expect. So the lesson I take from that is you can actually make money by keeping the refurb cost very light and minimal, but still get the end result. Similar to the last lesson is don't just buy a house that you yourself would only live in. One of the key things I had to learn is different properties attract different types of tenants. As long as the property is nice and amenable, tenants will look after it. Bringing it back to myself, the house that I live in, the returns just wouldn't make sense. So for example, buying the house worth 300,000 and it renting for £1,000, the numbers just don't stack up. But where I invest in with myself and clients, you know, we're buying properties for 50 up to 110,000 pounds, and rents are 600, 650 up to like 850, 900 pounds per month. So the lesson is invest in high yielding areas and properties because we're investing in the property for the returns, not because we want to live there ourselves. So moving on to lesson 7. We actually invested in a lease option. And if you don't know what lease option is, you can watch this video, which goes into a lot more information about them. So we bought a property on a lease option basis, but it came with a refurbishment cost of £40,000. That looked like a good investment because it had a big potential to be a serviced accommodation. But this was our very first serviced accommodation, and we had limited experience of service accommodation in that area. So whilst we made some good returns on a monthly basis, we experienced heavy amounts of cost monthly because of turnover of guests, cleaning, repairs, etc. Big return potential, but actually we experienced big losses relatively. So a lesson or takeaway is go big when you found an area and a model that you've tested at a small relative size and you've seen it, you've proven it, and now you can then confidently grow moving forward. So lesson 8, we found some great deals for clients and ourselves by thinking outside the box and going against the norm. One of the norms or myths is that buying leasehold flats is wrong and doesn't work. But we found a property for an investor where the purchase price was only £39,000 and was actually rented at the time for £450, but the rent could actually jump to £650 per calendar month, nearly a 50% more. And the key insight and benefit for a client is that tenant who was receiving local housing rates, the local housing rates were actually increasing, and the tenant was open to increasing the rent and actually adding and topping up their rent. So the lesson there is the right flats do work and give some great return. And if you want to learn more about the potential of investing in flats and getting great returns, watch this video. So lesson 9, I've bought and sold a letting agency for multiple 6 figures, managing hundreds of HMO rooms, and I'm about to buy another letting agency. However, when I first started, I had the belief that paying a letting agency to manage properties was just not worth it, and saving 50 to 70 pounds each month to go into my pocket was well worth it. But what I soon realized is self-managing puts a cap on the size I was growing my portfolio and business, as I was wearing too many hats. So lesson here is use a letting agency from day one. You're an investor, and the investor delegates and uses the right professionals. As an investor, your role is to invest in the right properties, in the right areas, and raise the funds needed to invest in it, and you use a team around you to help you do that. Lesson 10, similar to the last point, but building upon it. From my experience, I now actually pay slightly more, and I'll pay my letting agent earlier. The reason is that 99% of landlords will take the letting agent for granted. They'll just see them as expendable and not a valued team member. But what I've realized is that letting agents are my eyes, my ears on the ground, and when treated well, they go well above and beyond to ensure that I get the best tenants, I avoid the crappy tenants, and get the best repair cost saving. They see it as a partnership, and I see them as a partner. So lesson there is value and respect your power team of professionals, you know, your agents, your solicitors, because they're there to maximize your wealth and minimize your frustration and headache. Lesson 11, tenants are the lifeblood of my property business, and so I treat them fairly and well, repairing items quickly and making sure that they're liking and loving their home. But the relationship is a fair exchange. One of those mistakes I made early on was not reassessing rents on a regular basis, you know, every year to stay in line with at least the market rent, if not inflation. Now, I've had the unfortunate experience of not reviewing tenants' rents on a regular basis. Tenants then pushing back when looking to increase it because they now have the expectation that rent should increase no matter what mortgage rates are doing or inflation. They've always had that expectation that rent should remain at this rate, even though rents could now be at this rate. So lesson learned is annually review your rents with tenants whilst upholding high standards of customer service. Deliver a great service, and then they have the expectation that they have to pay the market rent for that. Both parties win. So lesson 12, Over the years, I've invested in some dubious locations, some locations that I really regret. Half the street was empty or run down. For example, a property that I bought for 35,000 and then rented it for £450 per calendar month. So on paper, delivering a really high yield. Yes, it worked well in that scenario because I had a very good property manager, but I've had so many experiences where it hasn't worked well and where tenants have just wrecked the place within just a few weeks. So the lesson there is location is key, but going further than that is knowing the best form of property investment for that particular area and having really good property managers and managing expectation is an even more important lesson to adopt. So lesson 13, my team and I have actively project managed more than 50 refurbs for clients, and one of the key takeaways is to adopt the mindset of in with the old. You might be thinking, yes, contrary to out with the old and in with the new. What do I mean by that? You see, there's things in properties that can be restored rather than having to be replaced and will save you thousands of pounds in both material and labor. Take for example, I had a property where the kitchen was in a dire state and would cost more than £3,000 to replace. However, we were able to save the kitchen carcass, put new handles on them, put a new worktop on, tile around the back and some flooring for just less than £1,000 in labor and material. So the lesson there is prioritize restoration over replacement. Lesson 14. When I quit the corporate world, I left with an income from my portfolio, the letting agency, and our property portfolio business. I find a lot of investors plan to quit too soon. Property is a long-term strategy, and having a job will help you with raising finance from banks and also to smooth out any hiccups that come along the line with growing a portfolio. So the lesson here is focus on building a cash cow in your career or business and use the extra cash and savings to invest in property as your retirement pot. So there's the 14 life lessons I've taken from property investing the last 10 years. However, whilst these are key lessons you can take and adopt into your life now, knowing the right type of investment strategy to invest in is the next step to building your long-term wealth. So watch this video now to find out the different strategies that you can benefit from.